All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today what we're going to be talking about is we're going to be talking about two cover call strategy ETFs. But the cool thing about these two ETFs is that they do pay on a weekly basis. So the ETFs that we're going to be talking about is QDTE and XDTE. And with these two ETFs, one is the NASDAQ 100 cover call strategy ETF. The other is the S&P 500 cover call strategy ETF. So we're going to talk a little bit about each of these, what exactly they do, and we're going to go over the performance, basically comparing them from their respective ETFs to their underlying indexes that they track, which are the NASDAQ 100 and the S&P 500. And what I also want to do is I also want to compare it to YMAX because YMAX is a holding in my current portfolio. I don't hold XDTE or QDTE, but I do hold YMAX, and I also want to compare it to the Dow Jones because I feel like that is the best measure. So in this video, I want to say we're brought to you by Alan Baker 8354. Alan, he asked, could you look at QDTE and XDTE, please? Well, you know what? Your prayers have been answered, Alan, and I am going to do that for you today. No problem. So I just want to start by saying we're up to 4,928 subscribers. So if you guys do enjoy this video, please do remember to subscribe. Okay, so QDTE and XDTE. These are both weekly paying cover call strategy ETFs. One goes on the NASDAQ 100 and the other goes on the S&P 500. From my understanding, they both use zero date to expiry cover call strategy options contracts. So they both do the exact same thing, just on different indexes. And basically, they're invested in the returns of their underlying indexes. Now, just to go over what a zero date to expiry options contract is, that is 0 days to expiry, as explained in the name. Options are options contracts that exist for a single trading session and expire on the same day as they are traded. So as soon as one day opens and they're writing 0 date to expiry options contracts, on the exact same date, that option is going to close and potentially pay them out a premium. Now, I don't fully understand options as a whole. I made this very clear on my channel, and I'm not trying to give any kind of false information around options, and so I don't really dive too deep into them. What I do is I would rather invest in stocks or ETFs which do the writing options for me, like the YieldMax funds, like Defiance, and like now Roundhill is another one. So we're talking about QDTE and XDTE today. And what I really want to do is compare the performance of these ETFs to their underlying, starting with QDTE. You could see starting back in March 7th, it was trading about 40, we're going to go and say it on the high note, $46.44. Well, you could see all the way down to May. You have March, April, May. We're talking about 3 or 4 months or so. The price has dropped about $2. And QDTE has been paying out weekly dividends, which I'm going to show you right now. You could see they are fairly consistent, but also inconsistent. You can see here 36.33 dropped all the way down to 9 cents, and 26.33. Maybe that was a little bit of a bloop. They tend to hang around 20 to 30 cents per week when investing in this $44 cover call strategy ETF. But you could see here the share price has fallen while the NASDAQ has actually done fairly well since, let's just get it right here, March 11th roughly. We go to March 11th, and the NASDAQ has been up very slightly. But you could see Roundhill, they are paying out those dividends. They're paying out roughly a 30% yield, so that's something to keep in mind. But I do believe that they haven't necessarily performed as well as they potentially could have. Now, when looking at XDTE, which tracks the S&P 500, we see kind of a similar story, starting at about $52.46. You can see the share price in XDTE hasn't really taken that much of a hit. It definitely went down here to under $50 on May 1st, but really hasn't taken that much of a hit. But when we look at the S&P 500 in the exact same time frame, going to about March 7th, you could see the S&P 500 is slightly up. So I do believe that XDTE performs slightly better, but to be honest, both these weekly dividend ETFs, they both perform about the exact same. They both track their underlyings, and they're really income plays. I would not use these plays for any kind of capital appreciation plays. They could potentially go up in time with their underlyings, but I don't see how they could make strong moves to the upside. I do believe they're just for income. And XDTE actually does have a slightly smaller dividend yield at 26.8%, still super fantastic. But of course, with these two ETFs, what is a strategy that you could do? You could do a lot of reinvesting and a lot of compounding. If you know that you're going to be investing money weekly into stocks, or you're trying to build your income pretty fast, what I would say is you could use both of these two ETFs for a great compounding strategy every single week, adding more and more to your investing accounts. That's what I would do if I was to invest in these two weekly ETFs. Currently, I only invest in YMAX. And with YMAX, you can see here that starting out at about $20, which is what all the YieldMax funds go into, starting in January, we have 6 months worth, 5 to 6 months of price history. You can see the prices pretty much remained flat during that time period, a low point of $19.38, while the Dow Jones in the exact same period has gone up slightly. But you got to remember, it's also been paying a 40% dividend, a consistent 40% dividend, and actually it's been growing their dividend, which has been pretty good too. So my overall opinion, just to kind of give a little sum up on QDTE and XDTE, I think they're pretty cool. I think they're very interesting. They obviously have a very competitive dividend yield at about 26 and then 30, we'll call it 31%. And they pay weekly, which is really kind of the highlight of these two strategies. How if you were to invest, you would be making money, it looks like, on the, for I think this is QDTE. Let me just double check that. Yes, for QDTE, you would be getting paid roughly about the 3rd, the 10th, the 17th, the 24th, and the 31st. And then with XDTE, when we go down here, you'll be getting paid on the 19th, the 26th, the 3rd, the 10th, the 7th. So about the exact same about the exact same dates for both these funds. So either one you invest in, you're going to get the payments on the exact same date weekly, which is pretty cool, and that'd be great for reinvesting. So this was really kind of the basis of this video, just to go over these two funds, these two ETFs. I hope it kind of opened your eyes up to some new cover call strategy ETFs. If it did and you guys want to stick around, we're up to 4,928 subscribers. Just sharing a little bit of my opinion on these stocks. Of course, not financial advice, just throwing that out there. But I hope you guys did enjoy it. I hope it opened your eyes up to something new, and I hope to see you guys in the next video.